Looking to invest your next stimulus check? Would you like to triple, quadruple, or even quintuple your $1,400? Want to collect safe, growing passive income along the way? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. The next American stimulus package is all but signed. And if you're an American, a new round of stimulus checks are all but guaranteed to come your way soon. We're talking $1,400 per adult, which is not chump change. But what if you could turn that $1,400 into much, much more money? What if you could turn that $1,400 into a golden goose that lays ever more golden eggs? What if you could invest that $1,400 for the long haul, grow your wealth, and build passive income? Well, that's what I'm talking about today. I'm gonna show you two high-quality dividend growth stocks that could turn that $1,400 into thousands of dollars over time. Better yet, both of these stocks are offering market-beating yields that are growing at inflation-beating rates. That means you get to have your cake and eat it too. Let's dig in. Let's say you want to invest that $1,400 into two stocks evenly. That's $700 per stock. These two stocks could each turn $700 into multiples of that number, all while providing safe, growing dividend income along the way. The first stock is Lockheed Martin Corporation, stock ticker LMT. It's the world's largest defense contractor. This high-quality dividend growth stock is a long-term compounder. The business practically prints money. This $92 billion by market cap defense company is classically thought of as an industrial play, but I'd argue it's a tech company at this point. Yet the stock is valued as if it's a stodgy, slow-growth consumer staples business. It's nonsensical. The stock's price-to-earnings ratio is below 14. That's less than half that of the broader market's earnings multiple. This stock's 5-year average price-to-earnings ratio is over 23. It doesn't get much more obvious than this stock. Investors bemoan a high stock market. Well, here's a deal staring at you in the face. It's an inexpensive, quality stock in an expensive market. And even after a recent period of languishing, the stock has still delivered a compound annual rate of return of 19.66% over the last 10 years, including reinvested dividends, turning $700 into $4,208. That might not get the Reddit YOLO crowd pumped up, but sextupling your money in only 10 years on a low-risk business sure gets me excited. Better yet, Lockheed Martin has been pumping out safe growing dividends to their shareholders like clockwork. The stock yields a market-beating 3.2%, and that's paired with a 10-year dividend growth rate of 14%. That's a double dividend in about 5 years. $700 is nice. $4,200 is nicer. Collecting safe, growing dividend income on top of all that makes it the nicest of all. I think there's a very good chance that the next decade looks a lot like the last decade for this stock. Keep in mind, we're starting the next 10-year period from a low valuation point on the stock, and the business is carrying a backlog of over $147 billion. This is one of my top 5 stocks for 2021. And I think it's a great long-term investment idea for half of a stimulus check. The next stock I want to highlight is Qualcomm Inc., stock ticker QCOM. This company develops and licenses products and services based on its advanced wireless broadband technology. Whereas I think Lockheed Martin should be thought of as a tech company, Qualcomm actually is a tech company. This $154 billion by market cap tech giant is an amazing business that surprisingly flies under the radar. It's a royalty machine, licensing out all kinds of IP so that smartphones actually work. Yet again, there's a valuation disconnect here. After finally moving past some legal disputes with Apple in the spring of 2019, Qualcomm stock surged. This thing went from under $60 a share to about $90 a share in a hurry. Since then, all Qualcomm seems to do is announce amazing earnings. However, the price to cash flow ratio of 19.9 is actually below its 3-year average of 20.9. This valuation implies the business in 2021 is somehow situated worse than it has been on average over the last 3 years. With legal issues behind them and mountains of opportunity in front of them, that's crazy. The stock is now $136 a share. That's well off of its 52-week high of $168 a share. This pullback is a gift, and it's a gift that you can use to turn your other gift, that stimulus check, into, well, an even bigger gift. Qualcomm stock has compounded at an annual rate of 12.14% over the last decade, including reinvested dividends, turning $700 into $2,200. That number would be even higher had I did the math back when the stock was near $170, which shows you just how impressive things have been. Investing $700 into Qualcomm today could very well perform that same magic over the next decade. The other magic? Qualcomm's growing dividend. Their 10-year dividend growth rate is 13.3%, which comes on top of the stock's market-beating 1.9% yield. While the dividend growth has been lumpy due to prior legal wrangling, the truth of the matter is that this company and its dividend has an extremely bright future. That bright future is blinding because of the rollout of 5G, which plays right into Qualcomm's massive basket of tech IP. With this rollout just getting started, Qualcomm could pave your portfolio with a yellow brick road of profits and growing dividends. Investing $700 into each of these two stocks would have turned $1,400 into $6,400 over the last decade. That's more than quadrupling the original capital. Plus, they're each paying safe growing dividends. These are golden geese laying ever more golden eggs. So before you do anything with that $1,400 check, consider investing it into one or both of these high quality dividend growth stocks for the next decade. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did. And let us know in the comments what you think about investing your stimulus check into these dividend growth stocks. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.